First, to set the scene, our session at the top of the agenda is going to look at the digital ecosystem with Dan Price of Rock Greek Global Advisors and Zertasha Malik from the Bank of England. Both Dan and Zertasha are ideally placed to give us a clear sense of the global environment and the headwinds we are facing. Their thoughts will set up later discussions on the operational challenges facing businesses and the steps we can all take together. So I hope you'll have a very, very productive and engaging day, and I'm excited to see the progress that we'll make in this important area in the future. Dan and Zertasha, over to you.
Keith, thank you very much. And to our friends at the City of London, and in particular, Yusuf and Duncan, thank you very much for including us. It's a pleasure to be here. An exciting time to be here. I want to take a step back initially from the issue of digital trade to frame some broader themes. And then I will be posing a few questions intermittently to Zertasha to get the views of a regulator from the front. But if you just look at the challenges facing this new government or governments of the last year or so, COVID, climate, competitiveness, you can see how data-driven innovation holds such great promise. How would we have made it through the lockdowns without Teams or Zoom or WebEx? And how would we have learned to say, you're on mute, but for these technologies? On climate, how are we going to get our arms around the green energy future if we cannot accurately measure energy consumption, if we don't have sensors that are able to transmit information on deforestation, and if we are not able to generate and transmit the data which will form the basis of a variety of disclosure regimes? So we've seen our dependence on the digital economy grow, and we've seen the merger, so to speak, of things digital and things financial. With the development of blockchain and DLT, digital and financial seems to be almost indistinguishable, whether we're dealing with payments or new asset classes or new on-ramps into the global financial system. Yet, despite these opportunities, there are significant risks. There's both operational risk and policy risk, and the risk of fragmentation, different jurisdictions taking different approaches. And it is not the case that all jurisdictions view this the same way. We have different ideas of what a free and open internet mean. We have different ideas on regulating platforms. And so it's not only important that we get this right among friends, but how can we get this right among those with whom we disagree? So I will stop there and invite Zertasha to say a few words on how you see the landscape from your perspective, and in particular, post-Brexit, do you see the possibility of the UK playing a leadership role?
Thanks very much, Dan, for a very insightful introduction. Good morning, everyone. I'm Zertasha Malik from the Bank of England. I head up our International Policy and Strategy Division. It is day 5 for me. I've just started. So please do bear that in mind. And thanks again from me as well to Terim and to Duncan for inviting me to speak today. I mean, Dan has done a very good introduction. I agree with everything he said there. I mean, digital trade It's a policy area that's evolving at an incredibly fast pace, and it's going to have significant implications for the financial services sector. I mean, just to put it into context, I think the financial services world that we operate in today is a very different one to the one that we sought to regulate just 10 or 15 years ago. Dan's already highlighted how recent events have increased our reliance on digitalization in our daily lives just to interact with each other. And I wanted to give an example of that. So in December 2020, the total value of contactless transactions in the UK was approximately 65% higher than in December 2019. That's a 65% increase in 12 months. And part of that is as a result of digitalization, but also as a result of events such as COVID. And another example is January 2021, the value of cash withdrawals was approximately 40% lower than the same period in 2020. But I think digital has long overlapped in the financial services space. So if we think about internet banking, which has been around for a really long time, but financial innovation is increasing this significantly. The pandemic is further fueling appetite for digital methods. And advances in digital and data mean that we're increasingly seeing many fintech firms, and they're offering new forms of money and new ways to pay. And as Dan has already highlighted, those have the potential to bring significant benefits to society, to businesses globally, not just domestically, but they also do raise complex and considerable public policy and regulatory issues. And there's a lot more in our assessment that we need to do to analyse these issues. If I may just very briefly touch on a couple of pieces of work that we're doing at the Bank of England from a central bank perspective. So you'll know that we're currently considering the case for a central bank digital currency or a CBDC, particularly in the retail space. And there's a lot of work ongoing to consider whether or not we should develop one, and the case has been made that a central bank digital currency will be technically feasible, technically robust. That decision hasn't been made at the moment, but there's work going on there. And in the stablecoin space, we recently produced a discussion paper that explored a variety of regulatory methods that could address both the payments related risk and the money creation risk. And we are currently considering what the framework should be for systemic stablecoins used in payment systems, and we will consult on that in due course. Maybe just briefly turning to FTAs, which Dan mentioned and Keith mentioned as well. I mean, and your question, Dan, about the UK's approach. I mean, the UK wants to be at the forefront of thinking globally on these issues. So we have been engaging closely, not just with UK businesses and UK communities, but we have also been playing a leading role on these issues in international fora. And I think you'll see that in the G7 finance ministers and central bank governors communique, which was published under the UK's presidency last year. And you'll see that in many other fora currently on various issues. But in a world, as you say, Dan, where different jurisdictions are moving at different paces and taking different regulatory approaches to digitalization, this can create barriers to trade in financial services and other areas of digital trade. And I know the report, which I read with interest, identifies that some jurisdictions are taking a more protectionist approach. There is a role for trade agreements, I think, both the agreements themselves, but also mechanisms such as dialogues to bridge the gap in some of those places.
Very interesting, and good to hear that you and the bank are deeply involved in these areas. I just wanted to tease out a point or two about data. We're all for the free flow of data. We're all against, at least in this room, all for the free flow of data, all opposed to data localization regimes. At a high level, data localization requires a replication of infrastructure in every jurisdiction where a company does business that's inefficient, et cetera, et cetera. Got it. But let's think about large data sets, how they are acquired and how they are used, and how enormously as yet unregulated it is. The benefits are clear, right? We rapidly develop COVID vaccines. How? Data sets, sharing data cross-border, sharing test results cross-border. A much more accelerated process than we saw in SARS and swine flu, the solution to which was driven by the same thing, that is data samples and sharing data sets. But with this aggregation of data in private hands or in public hands, there are concerns. Privacy, algorithmic bias in artificial intelligence. So as we think about digital trade, there's a whole set of issues that may not be front and center in the negotiation, but are going to be significant drivers of public policy, whether in the form of an exception to disciplines and agreements or exemptions. This we don't want you to touch. Or in the form of broader cross-border trade. What components do we determine are safe to install on our critical infrastructure? To put that in the financial services sector, many financial institutions have now outsourced their data management to cloud service providers. So we need to be looking at CSP resilience. But what about the components and subroutines that go into that cloud service? Where is that code written? By whom? Is it trusted? You will recall in 2019, then Prime Minister Abe at the G20 launched data free flow with trust. The Japanese are coming back to that in their G7 year next year to put meat on that, on those bones of what that means. So this is all background. Now let's bring the lens back to trade agreements for a moment. There's always going to be some tension between the outright prohibition on data localization and concern about broader public policy objectives, whether consumer protection, financial stability, data privacy, et cetera. And different agreements have taken different cuts and resolved them in different ways. Sam, your paper does an excellent job at kind of laying out some of these examples. From the US experience, at least post-TPP. In TPP, we got it wrong. It was kind of financial services and central bank uber alles, which if trade negotiators, sorry, Zertasha, are not vigilant is often the case. The financial regulators often have the big foot when it comes to trade, but there are ways of working together. And I think post-TPP, in the US-Japan bilateral and in USMCA, we found a way of working together, of having financial regulators formulate the policy and be at the negotiating table. So we ended up at a place where finally financial services were brought within the digital trade chapter, provided that the regulators could have access to the data wherever located for performing their regulatory and supervisory functions. Now, this may sound like a big exception. It, of course, like all other exceptions, is subject to abuse, but it is a breakthrough because financial services is now under the tent. And I'm wondering, Zertasha, what has your experience been here in formulating positions for trade negotiations or other negotiations?
Thanks, Dan. So maybe just to say up front that, in a post-Brexit context for regulators in the UK, the development of the government's independent trade policy has, of course, been welcome, but it has presented new and specific challenges for us, not least because the context where the UK was a member of the EU, we weren't used to having a seat at the table during trade negotiations. So we were all learning for the first time and doing some of this for the first time. And from our part at the bank, we look to approach these new challenges in the trade policy space through the prism of what we call safe openness. So that's to say that at the same time as recognising the positive linkages between services, sector liberalisation and economic growth, a linkage that has been a theme in many of the bank's own research papers, we also remain very conscious of the importance of resilience. And our view is it's absolutely essential in seeking to effectively facilitate financial services trade that we do not compromise on our ability to achieve comparable outcomes for financial stability. So turning to data, what that means is allowing firms to take advantage of the benefits associated with having their data processed or stored in multiple jurisdictions, including in terms of improved resilience to operational disruption, so long as that doesn't compromise the bank or the PRA's ability to access the data if required. So I think it's a very similar position to what I understand the US position is. So from a financial services perspective, firms can, we don't operate data localization requirements, put simply, so long as we can access the data if we need to fulfill our functions, and it's safe, secure, doesn't compromise financial stability. So that's our starting position. I mean, turning to involvement in trade negotiations, I'd absolutely agree with you that where regulators are closely involved in negotiations, this leads to better outcomes. I mean, clearly the responsibility for trade negotiations remains with the government, and it's a matter for the government. But much of the benefit in the services space in trade agreements, and certainly for financial services, is in the regulatory space. Now, whether that's to provide transparency and certainty to industry on the regulatory approach that we might take, for example, on authorization or what a firm can expect, or whether it's more ambitious and it's about providing preferential regulatory treatment. And the UK has bilateral insurance agreements with Switzerland and the US that do this, for example. So given this, those with responsibility for setting and monitoring the regulatory environment have a stake in these agreements and have a stake in delivering the more ambitious end of the spectrum. So very similar to the way you operate in the US, Dan, whilst we may not always be in the room for trade negotiations, we operate in a kind of room next door capacity. And that's allowed us to ensure that UK positions are being advanced to protect and ensure financial stability, market integrity, consumer investor protection. And just by way of example, on the data, recent data localization commitment or prohibition of data localization, we've achieved commitments on prohibition in recent FTAs with New Zealand, Australia, and Japan. And through consultation with the regulators, we supported prohibition as a default, providing we have access to the data if we need it for our functions, and subject to more defined exceptions. So as you said, there is always a possibility that exceptions are used in a way that they weren't intended to, but we've moved away from the kind of older FTAs, which had very broad exceptions, to ones which are more limited to give confidence to the other jurisdiction and to firms in the other jurisdiction of how we intend to operate within the parameters of the agreement. I think this also applies to the UK-Singapore Digital Economy Agreement that was signed earlier this year. And that seeks to create a model for global digital trade rules, allowing for kind of realization of new digital opportunities by facilitating cross-border data flows. And maybe I'll just stop by saying that I think it's worth recognizing that actually FTAs are not the only trade mechanism that we can use here. There are other mechanisms such as for liberalizing market access, such as equivalence, which the government uses, and that's very similar to the US substituted compliance framework, and mutual recognition agreements. And with those type of agreements, regulators are actually necessarily more involved because they're predicated, market access is predicated on assessments of regulatory and supervisory approaches. And so we would work very closely with the Treasury on those.
That's terrific. That's terrific background, and good to hear that UK regulators are so deeply involved in this space. I started out in this space in 1989 when I worked at the US Trade Representative's office negotiating the Uruguay round, if anyone remembers the Uruguay round. That was the round that actually closed. The Doha round that I also worked on, anyway. But from the Uruguay round forward, we see the incorporation into the global trading system of financial services. And whether it's cross-border, whether it's permanent establishment, whether it's increased disciplines around licensing regimes, we've seen pretty steady progress. Now we're at kind of 2.0, where we are trying to apply disciplines from the digital space to the financial services space. And it's a different set of challenges, and I agree regulator to regulator dialogues are important, but I will say this. I've spent slightly more time in the private sector than the government sector, so I still have enormous respect for the government sector and public servants, but also some skepticism in that, at least I'll speak from the US experience. When the US initiates a regulator to regulator dialogue in respect of the meaning of a provision of an international economic agreement, it is not the offensive interests of the United States in terms of the competitiveness and market access of its enterprises that are first and foremost. It is generally the defensive regulatory concerns that animate the positions of government. So when I look at agreements, whether it's NAFTA or anything else, and there's a provision that provides for the parties to get together and do an agreed interpretation on something, or for regulator to regulator elaboration of a discipline that has been put in the agreement, I immediately worry. And that's admittedly a kind of private sector reaction, but because what are they going to do in that room? Are they going to reach an agreement that gives effect? And in the UK, the case is it might, given the centrality of finances to the City of London and the UK as a whole. Are they going to give effect to the offensive affirmative interests, or are they going to prioritize defensive interests? I want to close our session by raising a final topic, and that's the topic of fragmentation. We've had good experience post-financial crisis in building an international cooperation infrastructure through the FSB and related bodies. We now see horizontally a landscape where there are certain flashing yellow lights that are similar to pre-crisis. We have innovation outstripping regulation. We have buildup of risk in digital systems without either government or the private parties fully comprehending the extent of those risks. In the case of financial stability, what is the financial stability transmission risk of crypto? How does the travel rule apply? Is there a difference between hosted and unhosted wallets? Right? So we've got, I just gave crypto as an example, and the pace of innovation and development of new products and services runs ahead of government's regulatory abilities, or the pace of government regulation, with the result that we may well be faced with a digital crisis where we don't have the international architecture that we have in the financial regulatory space, right? Which grew up, accelerated post-crisis, but banks were born local and grew global. Tech is born global. So you don't have the kind of time to develop national legislation and then rationalize it at the edges. So I'm wondering, Zertasha, if you all have given any thought to drawing on the lessons of the FSB to institutionalizing cooperation on digital and data governance.
I think those are really interesting points that you make, and they are definitely ones that are at the forefronts of many regulators' minds, I would say, across the globe, certainly ours. I think just going back to the fragmentation point, I think the choice is whether we have a fragmented system with many national barriers and less economic activity, or whether we go for an open approach, which promotes an open system which promotes growth and is well governed and well supervised. And that's the approach which I referred to earlier, which the bank calls safe openness, and we believe strongly in that, and the importance of international collaboration. And that's why we place such a premium on the international standard setting bodies. As you said, Dan, I mean, it was through such collaboration that the G20 was able to agree such a huge range of post-2008 regulatory measures on bank capital, leverage, liquidity, and put in place mechanisms that support supervisory cooperation. And you're right, the FSB does a huge amount of work to support the G20. And it's a key authority for us to discuss key issues. It's been extremely important during COVID, and now with the current geopolitical situation. And I mean, given the breadth of issues that we've collaborated on so far in various fora, global fora, I think there certainly is scope to apply those lessons to digital, to data, and to crypto in the future. And of course, the FSB, IOSCO, the Basel Committee, all the various committees are all thinking about digital and data and what it might mean for in their respective mandates. We've been very clear, the example you gave was crypto assets. We've been very clear on crypto assets that given the global nature of many crypto asset providers, the regulatory response for crypto assets and stablecoins will ultimately have to require international coordination with like-minded partners. We can't regulate in this space domestically alone without cooperating internationally, because that just raises a whole host of issues. Firms will either come and base themselves here or go and base themselves somewhere else. They'll just cherry pick the jurisdiction which they think has the most favorable regulatory environment, and that doesn't protect consumers anywhere or financial stability anywhere, because these are global issues. And maybe just a very final point for me, I mean, the UK is an international financial centre. It's a globally connected banking hub. It has the world's largest centre for international debt issuance, commercial insurance, reinsurance, foreign exchange trading, and it's a leading centre for asset management. I mean, we necessarily need to engage on the international level with our counterparts, like-minded, and those who are not quite on the same page as us, but we necessarily need to engage with them to deliver on UK financial stability and ensuring we have sound markets.
Absolutely. And just a final word before I take a question. And we've got to do that in a geopolitical environment which is much more fraught than during the financial crisis. I assisted the United States in putting together that first G20 summit. And the Chinese, the Russians, the Indians, the Saudis, the Turks were all very constructive players. I cannot imagine what the Indonesians are going through now in trying to put together their G20 leader statement, given how things now stand. So, Zertasha, thank you very much for those remarks. And I am instructed here by Tareem and Duncan. I have a question from online, and then I'm to take a question from the floor. Is that correct? Yes, okay, thank you. All right, so the online question is, the US has made it clear that it is focused on domestic policy, and the UK may follow suit going forward. What does that mean for trade relationships and the potential impact on the financial services sector? Is that for me or is that for Zertasha?
I would humbly suggest the trade expert goes first.
Okay. All right. The US is focused on domestic policy. The US is always focused on domestic policy. So I wouldn't say that focus on domestic policy is any greater now than it was before. The problems of our domestic politics are certainly quite pronounced. You read about them every day. You don't have to visit Mar-a-Lago to know what those problems are. But the US, I think, under the Biden administration, has done a pretty remarkable job in galvanizing the response to the Russian invasion in Ukraine, of re-engaging the United States through the Quad, through the US-EU Trade and Technology Council, through this nascent initiative called the Indo-Pacific Economic Forum, in getting the US back at the table on international economic agreement and regulatory issues. Sadly, this administration is somehow paralyzed by its rhetoric of a worker-centric trade policy or a foreign policy for the middle class, which one can understand as a kind of prism through which to evaluate policies, but it has moved from being a prism to a prison, paralyzing the US on trade policy classically understood. So I would say it's not preoccupied with domestic policy, but rather it has defined international economic policy through a domestic policy lens, response to Russian invasion aside. May the UK follow suit going forward? I will defer to folks in the UK for that.
And I mean, that really is a question for the UK government, but maybe I'll just say, I'll go back to Keith's opening remarks where he said that, you know, the UK is the second largest exporter of financial services, 62 billion annually. And the comments I made previously about the UK being an international financial centre and why that's the case. Even if there is a focus on domestic matters at home, I think for financial services, it's very hard, if not impossible, to purely focus in the domestic space. And I think from our perspective, as I've said, we absolutely need to ensure that we're working globally on the policy issues that we're facing today, particularly in the digitalization and trade space, but also on others such as climate, etc.
Exactly, exactly. Very good. Is there a question from the floor?
Thank you. John Cook from the City UK. I've been very interested by the discussion today. I felt that throughout most of it, the ways forward were regarded as bilateral ways. Dan spoke about the US-Japan agreement and the USMCA, and Zertasha spoke about the UK, Australia, New Zealand and Japan agreements. Only at the very end was there a reference to more multilateral approaches when Zertasha spoke of the FSB, IOSCO or Basel. And Dan, you agreed that these were difficult issues in a fraught international environment. But how do you see the future framework for making progress on these issues multilaterally? Is there indeed a possibility of doing that, or are bilateral arrangements the only likely ones in the view of the panel?
I do see a possibility for multilateral efforts. I think we need an FSB for tech. I think we need a data and technology board that pulls together global regulators in a forum where we agree principles, don't legislate, we agree principles, which when incorporated into national legislation in a sufficiently congruent way, mutual recognition, will permit cross-border access for data, for hardware components. But we need to have a forum where we can agree standards and principles. And I think we need to stand that up as a matter of some urgency. During the UK G7, Jonathan Black, the very able UK Sherpa, did stand up the Future Tech Forum, which was a kind of shadow or foreshadowing of this, but I think it was more or less a one-off event. I think the Japanese intend to try to carry this further with perhaps the institutionalization that we've discussed. And then multilaterally through the Indo-Pacific Economic Forum, the US and approximately 11 other countries will be trying to agree digital rules.
I mean, just from my perspective, I mean, from a narrower financial services perspective, rather than the broader tech perspective that Dan's just covered, there is, as I mentioned, a huge amount of work ongoing already in the global standard setting bodies. Of course, issues like crypto, and we've all seen what's happened with a number of crypto firms in recent months and how they have affected society, consumers, and society at large. Thankfully, they haven't yet had wider impacts on the financial system, but they are very worrying indeed. And there's a huge amount of work going on in the Financial Stability Board, IOSCO, Basel, amongst other CPM, IOSCO, and there are already a number of principles that have been published, but there is a lot more going on and a lot more to come in that space.
Tareem has signaled that our time is up, so we thank you very much for your kind attention and turn the floor over to Sam. Thank you.
Thank you.